Greetings, fellow YouTubers and truth seekers. This is a video response to RawDog, Critical Silver Thinking. I'm going to post to this video as well as a video response to SilverFuturitst. You are not a silver expert. I'm going to post this response as a video response to both of these videos. And I really would like to say thank you to RawDog and SilverFuturitst. Both of which I've been watching their videos lately, and I really like the fact that they're trying to get people in the silver community or people who are interested in silver to really think about why they want to be in the silver market, whether you're a stacker or a trader or a mining stock buyer, however you're making your foray into the market. Personally, I'm a stacker. I don't own any stocks. I'm not a trader by any stretch of the imagination. I really have spent the last 2.5 years going from an uninformed investor's mentality, always chasing, trying to make profits on the money I put in the market, to an informed saver's mentality, and really doing individual research and trying to figure out what is the best route for me to save my money. And for me, I think that is converting my paper assets to metal assets, mostly silver, a little bit of gold. And that's more of an economic decision for me because of the limited amount of money that I have, or paper that I have, currency to put into precious metals. It's better for me, in my opinion, personally, to put most of that into silver. I want to address a couple things that RawDog brings up in his Critical Silver Thinking video, and I understand completely what he's saying about making sure that you're not just eating one side of the story, so to speak, and that you're getting both sides of the coin. But I do believe that there's more than one or two sides to the story. I think there's at least what I consider three sides to the story, or three issues in the silver investment arena. And there's probably other reasons that people have gotten into precious metals that I'm not going to bring up, and that are unique to their particular situation. But for me, getting involved in silver was a way to protect myself from inflation. I noticed in 2006, I started noticing the gold price, I guess I should say I started paying attention to it more specifically. And what I had noticed running up to 2006, just in watching TV, were all the commercials for companies wanting you to send them your gold, your scrap gold, old jewelry, your cash for golds, your gold kits, companies of this nature. And then I kind of noticed a shift from those types of commercials. Not that they went away, but I also started noticing after a while commercials for the other end of the spectrum, people wanting to sell you precious metals. And so I noticed that something was going on, and I needed to start paying attention. And so I really started following the gold price around 2006 when it was in the 600s. I don't know specifically when or what price, but that's, as I recall, where I really kind of started paying specific attention to the gold price. And several years go by, and I finally bought my first ounce of gold in the third quarter of 2010. When the gold price was in the 1300s. I think that first piece I bought was for $13.47. It was a Canadian maple, and so I finally bought a piece of gold after the price had more than doubled from when I started paying attention. And I was relieved now that I had the gold in my hands, but I immediately became discouraged and a little distraught because I realized, hey, it took me from 2006 to the end of 2010 or near the end of 2010 to save up enough money to buy an ounce of gold, how long would it take me now to save up money enough to buy another ounce? And by then, what would the price be? $1,500, $1,600, $1,700, $1,800, and of course we're in the upper 1,600s right now. But so I really started looking for an alternative to gold, and that's how I started thinking about silver. And prior to me buying that ounce of gold, I would say a year and a half before that, just out of chance or maybe serendipity, I got an old Mercury silver dime back and some change at a gas station. And I didn't think much about it at the time, but I thought it was kind of neat. And hey, I remember these, and I just kind of put it away in the cabinet. In the meantime, I still was watching gold. And so once I started panicking about how am I going to afford to buy more gold, I remembered the silver dime. I went and looked for it. I found it in my cabinet, and I started looking into silver. Well, I bought my first silver before I really had done much research. I was just going off of my instincts of what I was seeing happening in the monetary system with all the bailouts that were going on from the housing crash. And bought my gold in October of 2010. Then started thinking about silver, and it was either the first or second weekend in December I bought my first silver when it was right at $30 an ounce, right in this area here. And it was a Saturday. I bought 3 Canadian silver maples, and I paid a $5 premium on each piece. This was before I knew, what you should pay as a premium. Fortunately, now I've found a guy that I've been dealing with here locally for a couple of years who has very reasonable prices. I'm actually able to buy 90% silver at spot, and he's very reasonable on premiums for silver eagles and maples. If they're backdated, it's usually only $1 over spot. Sometimes, depending on what the market's doing, he might charge $2 per ounce, whether that's a bullion round or sovereign. But in any case, I'm fortunate in that instance that I do have a dealer with very reasonable prices compared to what I've seen everywhere else, even on the internet. But in any case, I started buying silver, and then I really started discovering this so-called quote-unquote silver story on YouTube regarding whether there was a silver shortage and investment demand versus industrial demand, whether the shortage was above ground or below ground or a combination of both. And then, of course, you have the side of the story that is about silver and gold manipulation, whether or not those markets are, manipulated up and down. And then I think another side of the story, the third side of the story, and the most important side of the story for me is the monetary policy of the United States and the Federal Reserve. And as I started kind of really studying the history of the dollar and the history of the Federal Reserve, it was very easy to see that the monetary policy does change every 30 to 40 years. Of course, the Federal Reserve began in 1913. The monetary system changed with the Gold Confiscation Act, so-called confiscation, voluntary turn-in is what it was, in 1933 when the dollar was revalued against gold. Then it changed again after World War II with the Bretton Woods Standard, where, of course, the dollar floated against gold and some other currencies. And then the current system that we're in, 42 years on now, with the Federal Reserve dollar reserve standard, where all currencies are only backed by our paper fiat and nothing else. So, we're 42 years in. The average lifespan of a current monetary system or the form of currency is, 35 to 40 years. So we're a little overdue for the system to change. Whether that's going to be SDRs or a new gold standard or the Amero or some kind of regional currency, who knows? Quite honestly, I don't care. I don't see any better alternative to protect yourself. And if you want to be a saver, I don't see any better alternative than gold and silver. And for me, the question is not really whether or not it is manipulated. I tend to believe that it is, but I'm thankful for the manipulation. I bought my biggest purchase at the top of the market here at $48. In fact, I borrowed the money from my father to make that purchase. But I've just been dollar cost averaging, and as the market's been going down and consolidating, I've been making purchases, and I've been able to keep my dollar cost average price per ounce under $35 an ounce, and I have about 6 times as much silver as I did when I started this process back at the beginning of or the end of 2010, beginning of 2011. So for me, it's not so much as a manipulator, it's not so much as a shortage. It's just that I see what's happening in the currency markets, and of course, that's the reason I make my decision to get into silver. Not because it's manipulated or not manipulated, or because there is or isn't a shortage. Only because I see what the central banks around the world are doing. And it looks like to me that each of these moves up is just a recurring pattern that keeps happening in a larger and larger capacity. You can see this run up here in 04. Then a move down, and the market consolidated, quote unquote, consolidates to a smaller and smaller amount, a smaller and smaller channel. Then it runs up, then it starts consolidating. That consolidation gets smaller and smaller. Then it runs up, it consolidates into a smaller and smaller channel. Then it runs up, then it starts consolidating. We're 2 years into this current channel here, and based on the pattern here, my guess is you're going to see some further consolidation and the channel getting smaller in the 31 to 32, maybe 33 range. And so in the next 4 to 6 months, you'll probably see the next run up. Could the silver price drop? Of course it could. Could it go up, drastically tomorrow? Of course it could. But the point is, I want to be positioned for the move in the best case possible for when it does happen. So I'm in the best place I can be as of today. And as the weeks go by and I make more money, and we'll see how that position changes. But for me, that's my critical thinking. Of course, when I first started investing in silver, that's kind of when the quote unquote silver story was taking off on the internet. That's when Max Kaiser started his campaign for buy silver, crash JP Morgan, silver to 500, silver liberation army. That's when Mike Maloney started, becoming more popular. Chris Duane was coming on the scene, becoming more prevalent. And of course, I've listened to James Turk and Eric Sprott and Andy Hoffman. I listen to Alex Jones, Gerald Celente, Peter Schiff. Those last two, I really value their opinion, especially Peter Schiff. I noticed that the mainstream media kind of shrugged him off when he was calling that was predicting that the housing bubble was going to happen. He certainly made the right call, and I do value his opinion. And all of these guys, whether or not they believe in silver manipulation, whether or not they believe in shortages in silver or gold market, they all tend to agree that you can't keep blowing air into a balloon and expect that it will never pop. And that's what's being done with the currency markets. We just keep pumping out more and more air into the balloon, and eventually they're going to have to go to a new form of currency in some manner. You cannot get out of debt by creating more debt. So anyway, SilverFuturitst and RawDog, if you guys take the time to watch this video, make any comments, I appreciate it. Anybody else, you're of course welcome to reply and comment. Thank you very much, and happy stacking.